The British property market stands at a fascinating crossroads in 2026. After years of turbulence, pandemic disruptions, interest rate shocks, and shifting work patterns, we're entering what many experts are calling a period of recalibration. Whether you're a first-time buyer, seasoned investor, or simply curious about where the market is headed, understanding the current landscape has never been more critical. Let's start with the fundamentals. UK house prices have shown remarkable resilience despite the economic headwinds of recent years. The average property price currently hovers around $290,000, though this national figure masks enormous regional variation. What's driving these numbers? Three primary forces: supply constraints, demographic demand, and the cost of borrowing. Britain simply isn't building enough homes. We need approximately 300,000 new homes annually to keep pace with population growth and household formation, yet we're consistently falling short of this target. The structural deficit continues to underpin prices, even when other factors suggest they should fall. For most buyers, understanding mortgages is the gateway to property ownership. The landscape has shifted dramatically from the ultra-low interest rate environment we enjoyed for over a decade. Following the Bank of England's aggressive rate hiking cycle that began in late 2021, mortgage rates climbed to levels not seen since 2008. Currently, you're looking at fixed-rate mortgages ranging between 4.5% and 6%, depending on your deposit size and creditworthiness. This represents a significant increase from the sub-2% deals available just a few years ago. For a $250,000 mortgage, the difference between a 2% and 5% interest rate amounts to roughly $400 more per month, a substantial hit to household budgets. The deposit requirement remains crucial. While 95% loan-to-value mortgages exist, they come with significantly higher rates. The sweet spot for most buyers is a 15-20% deposit, which unlocks more competitive rates and demonstrates financial stability to lenders. First-time buyers should explore help-to-buy schemes, though these have been scaled back considerably from their peak. The geography of opportunity in UK property has been redrawn. During the pandemic, we witnessed the great reshuffling. City dwellers fleeing to coastal towns and countryside locations, chasing space and quality of life. This trend has moderated but hasn't reversed. The Northwest, particularly Greater Manchester, continues to show strong growth potential. Investment in infrastructure, cultural renaissance, and comparatively affordable prices make it attractive for both owner-occupiers and investors. Birmingham and the wider West Midlands are benefiting from HS2 development, despite project setbacks, while Scottish cities like Edinburgh and Glasgow offer compelling value compared to London. London itself presents a nuanced picture. Central zones have seen price stagnation, with some prime areas experiencing modest declines. However, outer London boroughs with good transport links remain resilient. The key is connectivity. Properties within easy reach of major employment hubs hold their value. Coastal areas experienced dramatic price surges during 2022, and many are now consolidating. Towns like Whitstable, St. Ives, and Southwold saw increases exceeding 30% during the pandemic. Current data suggests these markets are cooling, though they haven't crashed. Buy-to-let investment has become considerably more challenging. Tax changes introduced over the past decade have eroded profitability for many landlords. The removal of mortgage interest tax relief, higher stamp duty rates, and increased regulatory requirements mean the traditional buy-to-let model requires careful analysis. However, opportunities remain for strategic investors. Houses in multiple occupation, HMOs, continue to offer superior yields in university towns and cities with young professional populations. Purpose-built student accommodation represents another niche, though it requires significant capital and expertise. The rental market itself is extraordinarily tight. Demand vastly outstrips supply, with tenant demand up approximately 20%, while available properties have fallen. This dynamic supports rental growth, which is currently running at 6 to 8% annually in many regions. For landlords who can navigate the regulatory landscape and maintain quality properties, returns remain achievable. Getting onto the property ladder has rarely been more difficult for young Britons. The ratio of house prices to earnings now exceeds 8.1 nationally and approaches 13:1 in London. For context, a ratio above 5:1 is considered severely unaffordable. The Bank of Mum and Dad has become the 9th largest mortgage lender in the UK, contributing billions annually through gifts and guarantor arrangements. This intergenerational wealth transfer is widening the gap between those with family support and those without. Practical strategies for first-time buyers include considering shared ownership schemes, exploring newer build developments where developers offer deposit contributions, and being geographically flexible. Commuter towns offering genuine work-from-home options can provide 30-40% savings compared to equivalent properties in major cities. What does the remainder of 2026 hold? Most analysts predict modest price growth of 2 to 4%, with significant regional variation. The key variables to watch include Bank of England interest rate decisions, wage growth, and government housing policy. The planning system reform debate continues, with pressure mounting to streamline approvals and increase density in urban areas. Any meaningful changes here could shift supply dynamics, though implementation typically takes years. Energy efficiency is becoming increasingly important to property values. With stricter EPC requirements on the horizon and rising energy costs, poorly insulated properties face value depreciation. Buyers should factor renovation costs into their calculations, while sellers might consider efficiency improvements before listing. The UK property market in 2026 demands informed strategic decision-making. Whether you're buying your first home, investing for income, or planning your next move, success depends on understanding local markets, securing competitive financing, and taking a long-term view. Property remains a cornerstone of British wealth building, but the easy gains of the past decade are unlikely to repeat. Today's market rewards the prepared, the patient, and the prudent.